Hello, hi everyone. Good evening. Hope you have all had a good trading day. What a Monday it was on Dalal Street. We had the markets down 1% when they opened, and then by the time it all ended at 3:30, we were up. We were up half a percent. Tremendous volatility, but a lot of gains that were to be made. With that, friends, I wanted to take time today to share a quick video about Shyam Metallics. I know a lot of you would have got the message today about the allotment. If you have got it, that's amazing. It's really good to have the feeling of being allotted an IPO, and I know a lot of people were waiting to have that feeling. So congratulations if you have got an allotment. If you have got an allotment, what we now want to do is to actually think ahead to gain smart on profit, which is the main motto of our channel, TreadSmart, and also to understand the post listing view of what we should do with Shyam Metallics. Overall, friends, from the perspective of Shyam Metallics, some quick details. The price brand was in the ratio range of 303 to 306. It was a 909 crore issue. The total installed capacity was 5.71 MTPA, which is pretty good for a mid-ranged company, steel metallics company. The revenue was almost growing at almost 8% per annum from FY18 to FY20, which is again solid growth in the revenue. Uh, the FY21 numbers were actually the kicker. So post COVID, as the markets started opening and as demand started gathering in all of the markets, they registered a 75.1% astounding YOY growth in net profit, and it surged to 456 crore. Uh, this is the reason why it has generated a lot of buzz, not only for Shyam Metallics, but the overall sector. The picture in terms of how does it look today, where does the valuations picture sort of take us? So as I feel, this is pretty much the most important gist of an IPO. For the PE ratio, it is at the upper band of the company. So it's at 12 for the upper band of 306, which is slightly on the higher side, but it does leave some room for comfort as well. The EV to EBITDA value, as we call it, the EV EBITDA ratio, that is at 8.6 times. This is definitely on the higher side, meaning that they definitely need to raise margins uh, or enterprise value to actually make this ratio better. The earnings per share as of December 2020 was 19.53, which is pretty solid in terms of the earnings per share. So as you can see, a steady picture overall, especially the earnings per share reflecting a pretty good momentum in terms of the business and the business creating value for the shareholders, which actually reflected in it getting solid interest from the investor community, especially retail and also from qualified institutional bidders. Cash is king. So let's look at the cash picture. So guys, I always feel like whenever a company is hitting with an IPO, the most important area that you look into in the DRHP that it files with SEBI is the cash and cash equivalents. You should have a very solid look, and this should actually determine what should be done. So I've highlighted three main points here. There are many points, but the three most critical points are: it generated cash from operations as of December 2020 of 7168 crore, solid cash that it generates. So it's a good cash generating machine. Of course, remember this was the time when the metal super cycle had just started. So it's sort of getting there. The net cash that they used in financing and investing activities were 6869 crore. This is slightly on the higher side, friends, and they are clearly using it a lot for building capex, building capacities, building more factories, and which is good, but they also need to be understanding of the demand environment outside, because that is a key risk out there. The net cash thus, post taxes, of course, they've paid around 600 crore of taxes for the quarter, and that makes it 153 crore, uh, which is good that the company is net cash positive, as we call it. So that's another positive sign, another reason why it generated good interest from the investor community. However, from my perspective, it's still slightly on the lower side. The risks then, metal prices. China has already started cracking down on high commodity prices by various price controls. As you know, China can control markets, China can control their own demand, China can control supply. They are a closed economy and they can do a lot of stuff. And this is probably the biggest risk to metal prices. You guys might have already seen that affecting the metal stocks already, right? So most of the metal shares are down about 5 to 10% from their highs, and this is one of the key reasons why. The second risk is very, very relevant for Shyam Metallics, which is debt. They have indicated that they will continue to raise money through debt for capex, essentially meaning they might take a lot of new loans, financial activities, they might take dollar denominated loans as well, because of course money is available cheap outside and they can get big amounts of money for that. However, that is the key risk. If the Fed starts raising rates and money is not cheap enough, they might have to go for refinancing if their margin to EBITDA, which is the next point, does not actually go higher. So they clearly need their margins or their EBITDA to actually be higher, which means for every ton of steel that they produce, they need their overall profit out of that ton of steel to be higher. And that's the key risk there for the third point about margins EBITDA, is that the larger players here like Tata Metallics and others can actually have much better long-term supply contracts and have more sway on the markets in terms of pricing power. For overcapacity, one of the things that we have seen so many times, umpteen number of times in the markets, is companies are highly positive when there is a positive cycle building in terms of demand, and they go towards overcapacity. And this is very, very relevant for newer companies, new kids on the block, as we say. And management prudence does to control capacity is very, very important to build demand. So I think these are the four key risks. The first one is probably the most near term risk, and the other three will be determined by how the management can perform. So then, strategy ahead, what should we do? I think it was, of course, a subscribe, just because of the high commodity price regime. They had a very strong business strength in, especially in Eastern India, and slowly starting to build in the North as well. And the Indian government sort of protectionist approach towards domestic companies and boosting exports, because of course boosting exports has been their key outcome in terms of the coming out of the pandemic, right? So India wants to export more and focus on the export led uh, activities much more. Uh, what should you expect in terms of listing? I expect 100 rupees per share in terms of the listing gains. The gray market premium here, friends, is indicating around 150. I expect that to be trimmed a little bit and to get around 100 rupees per share, which is again very solid in terms of the listing gains. I hope it's higher. It would be great for everyone who's got allotment, but I think it would be around 100 rupees per share. Post listing, this is the most critical one. So based on all of the things that I said and I highlighted in terms of the risks, I think Shyam Metallics is a sell on each rise, meaning once the listing happens and you get a solid 100 rupees gain, per my view, starts going on a trailing stop loss plan for this. If it keeps on going higher, it's okay. You can keep on holding it and start trimming positions as soon as you see some profit booking. So follow a trailing stop loss. If it goes way higher, I would actually suggest booking 50% and then exist in the next few months, because it might actually not be the metal super cycle as everyone is making it out to be. So, and even if it is, Shyam Metallics might not be the biggest gainer from all of that, and it could be its competitors which are already listed who could gain the most. So, guys, Thank you so much. Just a message from me and my team at TreadSmart. We absolutely respect the valuable time that you give us every time to hear us, and hopefully it's working, and hopefully it will reap more results as we go ahead. Let's keep on working smart, and we'll keep on making profits. Yes, and do subscribe and like the video if you found it helpful. Thank you so much. For any questions, any request, you can feel free to comment on the video, as well as feel free to write to us at treadsmart30@gmail.com. Thank you so much. Take care, everyone.